Hello, you're watching Deal Flow, the CNBC Africa show that gives you perspective on Africa's deals and deal-making trends. I'm Erica van der Merwe. Having once been a small South African player, SAB Miller has since become the world's second largest brewer. SAB Miller's journey towards global significance includes purchasing Colombia's Bavaria in 2005, Grolsch in 2007, and the 2011 purchase of the Foster's Group. This week, we take a look at the beer giant's recent attempt to acquire Heineken, the world's third largest brewer, and we get insight on the outlook for the global beer industry. With me in studio are Nic Norman-Smith from Lentus Asset Management and Meintjes from Imara S.P. Reid, and joining us from the Cape Town studio, Philip Short from Old Mutual Equities. Good to have all of you here with us. Nic, I'm going to start with you. So really interesting. So we're seeing on the surface now what I presume has been bubbling below the surface for some time. So the offer that SAB Miller's made for Heineken, a reflection of the pressure, I'd imagine, on the large global beer players, the pressure to find further ways of cutting costs and boosting earnings growth.
Yeah, exactly. You know, the global beer industry is under some pressure because there has been quite a shift in the developed world, certainly, to higher end beers and to craft beers. And obviously, this isn't great for a lot of the incumbents. You see a lot of these small craft breweries coming out, certainly across the States, and we're certainly seeing it in South Africa as well. So beer makers are generally trying to move into the premium space, and obviously it's a scale business. So these businesses generate significant cash flows. If you can leverage those cash flows and acquire, then you can grow and cut some costs. And we've seen the two biggest global beer makers, AB Inbev and SAB Miller, certainly do that. Two businesses that have just grown out of massive acquisitions. I think SAB Miller's done 50 acquisitions over the last 10 or 12 years, and there've been a couple of really massive deals. So and they've been very successful at it so far.
Yeah. Steve, we'll go into more detail on this. So Heineken for now has rebuffed SAB Miller's offer. Do you think the next step will be simply SAB Miller sweetening that offer and changing the Heineken and the holding family's minds about the deal?
Yes, well, I think they are entitled to put up a bit of a fight because the family really only control 26% of the shares, and you know there are other shareholders as well. So, yes, they might well do that. They've been trying to escape from the clutches of AB InBev for a long time, and you know even when they took over Foster's in Australia, some people commented that that was partly to escape.
So Philip, in Cape Town, so this is a race for size, a race for the hearts of emerging market consumers, presumably also in Latin America, Asia and Africa.
Yes, I mean, as one of your guests said, now it's all about scale, and it's also all about growth. We're seeing in Australia, Europe and America, volumes are pretty depressed. So we still have volume growth in beer. It's in Latin America, it's in Africa, and it's in Asia. So I think everyone just is looking for that growth, where they can do it organically, or if they can't, then they will do it by acquisition.
Well, we take that thought further for some perspective on how the international beer industry is shaping up here with some research we've put together.
Over the last 10 years, the global beer industry has undergone a steady process of consolidation through mergers and acquisitions. The top 5 companies, namely AB InBev, SAB Miller, Heineken International, Carlsberg Group, and China Resource Snow Breweries Limited, now represent more than 50% of the global market. One of the major players looking to expand their trade is SAB Miller. Its value on the JSE ballooned by 94 billion rand to 1.08 trillion rand early last week, after reports suggested it was likely to be at the center of a proposed merging with the world's third biggest brewer, Heineken. Unfortunately for them, the Amsterdam-based company refused the deal, suggesting that they were protecting themselves from a potential takeover. After news of the Heineken bid, AB InBev, the world's biggest brewer by market capitalization, has let its interest in SAB Miller be known. Will SAB Miller buy into such an offer? Only time will tell.
So Nic, what are the general drivers and the trends that we're seeing? So we've spoken about consolidation, about cost cutting, and we've referred to various market regions. So if we look at the other element of this, SAB Miller for some years trying to escape the clutches of AB InBev. So what's attractive about SAB Miller is its exposure to the African market, presumably, and the growth prospects there.
Yeah, and what's interesting is when you hear the AB InBev, SAB Miller deal talk, everyone's immediate reaction is, oof, antitrust, there's no way they're going to get this right. But when you actually look at the businesses and the regions that they're in, it's quite a nice fit. So other than China, so SAB Miller's got Snow, and AB InBev's got some operations as well. They'd have to divest that. And and in the US, obviously, with SAB Miller and the Miller Coors, and obviously Budweiser and the various AB Inbev US businesses, they would have to divest that. But quite frankly, the US is stagnant. It's not particularly profitable. It's a very, very competitive market. So that type actually makes a lot of sense from a strategic point of view, and would certainly make a mammoth behemoth in terms of global beer. And what we've seen with AB InBev is their strength in cost cutting and running businesses efficiently is just phenomenal. If you look at the kind of margins, so operating margin for SAB has been around 20% for the last few years. AB InBev is sitting north of 30%. So there is a big argument that they could bring that cost reduction in to SAB Miller and really bring some synergies. I'm always nervous with these big deals. Synergies are touted, but it is arguably these businesses have been better than most in terms of actually doing well. But beer company prices are not cheap at the moment. SAB Miller's on 27 times earnings. AB InBev's on 20 times earnings. Heineken, I think, is around 20 times earnings as well. So they're not cheap businesses. So great businesses, but the market has rated them as such.
Philip, what is your view on the likelihood of AB InBev being successful with an SAB Miller offer and takeover, and also just sketch the picture of what that, as Nic said, a behemoth, what that would look like. AB InBev being twice the size of SAB Miller, margins are better, but it doesn't have the full exposure to the premium brands that SAB Miller has.
I think it's anyone's guess to see if this deal will go through. There's a lot of speculation, there's a lot of rumors, and you can find as many people that will tell you why this deal won't happen as you'll find people that say that it will happen. So, I mean, I don't want to speculate on whether it will or won't. As Nic mentioned, the prices of SAB in particular, very expensive. For ABI now to come in and still have to pay a premium on top of the current price, it's going to be quite a task. And also SAB is quite efficiently run at the moment. ABI is very good at cost cutting and extracting synergies from the companies that they buy. So for them now to pay a premium on a company on which there's not that much more synergies as their previous acquisitions, it's a hard task. It's a lot to ask for. In terms of going forward, I think there'll still be a lot of consolidation. And yes, ABI could buy breweries could buy Heineken. There's a lot of combinations of how this could work out.
Yeah. So Nic, you had some comment on that, but it sounds like a huge chess game.
Yeah, but broadly speaking, remember where interest rates are. They're at record lows, artificial lows. So what that does is when you put the numbers into a spreadsheet to do these deals, everything makes sense because your cost of capital is so low. But AB InBev already got a large portion of debt from their previous acquisitions, so they're adding more debt onto that. Now, granted, these businesses are big cash generators, but still, that when you're looking to refinance that debt going forward and rates have gone up, it can put you under a bit of pressure, and it takes away the flexibility when you've got this millstone of debt around your neck.
Steve, what's your analysis of that? So certainly low refinancing rates for taking on debt, but SAB Miller, more than 1 trillion rand in market cap, so it will be a sizable chunk. AB InBev has just reduced its debt levels from previous acquisitions. There would be risks for it in taking on more debt, regardless of the cost.
Well, absolutely. I dare say it might pan out all right in the end, but to follow that note of skepticism, David Stockman, the former US Treasury Secretary under Reagan, has taken a very scathing view of the whole process, seeing it as a function of the excess liquidity created by central banks in general without much macroeconomic benefit. So clearly it's lovely for deal making and deal makers, but the question is what macroeconomic benefit will it entail in the end?
Steve, looking back, SAB Miller has a 120-year history, and if you look on their website, it's nicely set out there, and you see the progression. I think it was about 1992 where they first started looking global, Eastern European acquisitions, later further acquisitions in Africa and then Latin America. How would you rate their deal-making M&A activity? Because to a large extent it's been through M&A acquisitions.
Well, yes, the M&A is very good, but I would like to emphasize that they're very cautious and careful in their organic growth into Africa. It's not the big South African gorilla charging into the African jungle. The way they've approached Nigeria, for example, they build from the ground up and they sass out the market. So I don't think one wants to underestimate their skill in their organic management in developing markets. And incidentally, to follow the point, in developing markets, they're long way from premium brands yet, but they've still got that switch from indigenous beer to bottled beer, which is where the growth really is.
Right. Philip, last comment from you. So given your analysis and your assessment of what's happening in the global beer industry, prospects for SAB Miller, just as a stock to hold in a long-term portfolio, how would you rate it?
I'd love to own the stock, but it all comes down to price, and I think it's just a bit too expensive for me right now.
Thanks, Philip. Nic Norman-Smith, so we've spoken, I think Philip referred to that, the other options. So the third or the other bigger ones. So the third biggest is Heineken, but there's also Carlsberg and Diageo. So those are other options for SAB Miller to take on if they're wanting to fend off AB Inbev successfully. Are those viable options?
Potentially. I mean, in terms of the Heineken, I think that controlling family I think there's some kind of a pyramid structure there. So I think it's going to be very hard to get it done if the family decides that they're against it. There are options with these other businesses. I don't think SAB are vehemently opposed to AB Inbev. There have been some comments at various forums saying, well, maybe we could make the numbers work. So, these are all options. But it's a great time for the investment banks to sell these deals because of the current environment. But if that's the case, always be very aware, because you can pay. You're paying premium multiples on peak earnings with artificially low interest rates. There can be a lot of danger here. So these are wonderful, wonderful businesses. But as always in investing, if you pay the wrong price for that wonderful business, you're not going to necessarily get a fantastic outcome. SAB have been fantastic about being quite counter. So moving into developing markets when they weren't that popular. Then when everyone was worried about developed markets, they've gone in and bought Foster's. So certainly identifying Lentus' investment philosophy with theirs, we quite like it. It's quite contrarian. Maybe they'll take the money and get bought out by somebody who's really keen to pay up.
Steve, final word from you on the attractiveness, the appeal of SAB Miller. And I can't help, I'm tempted to ask, in these sort of M&A trends and activities, to what extent does ego play a role in not wanting to be acquired by another big player? Is it about ego, or is it purely about shareholders' interests?
Well, I think it would be completely unnatural management not to fear for their jobs if ABN did take over. But I mean, a lot of South Africans would be sorry to see an iconic brand swallowed up. But yes, it's a case of, you say the attractions of the stock, well, buyer beware right now, but in the default option is, of course, to hold while all this excitement is going on.
Indeed. Thank you very much, gentlemen. Thanks to my guests, Philip Short from Old Mutual Equities. He was in Cape Town. And Nic Norman-Smith from Lentus Asset Management, and Stephen Meintjes from Imara S.P. Reid. And from me, Erica van der Merwe, and the Deal Flow team, it's goodbye for now.